Right. All right. Are we live? If you don't see your stream, try refreshing. Oh, we are excellent. Hello, good morning there, YouTube family. It's your boy Nick, HOUTX Trader, coming live from Houston, Texas. That's right, North Side, baby, in the house. Guys, this is just for training. This is not financial advice. If you need financial advice, please go see a financial planner, guys. We're just going to look today at some trades. I'm already in some trades. I'm probably not going to take any other entries. But we're going to look today, and we're going to look at reasons why I did some things and some of the trades. Let's just start off. Let's start off with crypto. I haven't looked at crypto in a few days. So on crypto, I'm more of the daily type guy. I notice now that I'm live streaming, my mouse is a bit skippier than normal. Perhaps I should plug in my hard mouse, but anyways. Look, guys, look at Bitcoin. Look at all of this liquidity that it's setting. I mean, it's finding a very hard top at 72,000. This is going to get broken. This is going to get broken rather quickly. So if it was me, and it will be me, I would be buying more right in this area. 61,000. Let it come. So this is just what I think. The market hunts liquidity. And the market is obviously setting up a lot of liquidity below, right? So the first little batch of liquidity that we see is this little guy, right? So we saw how it come down. You could say that this is a bull market. This could then be considered a bull flag, if you will. Let's break up the handy dandy tool here, right? You see how it's coming down and then it popped out, right? So this is letting you know that the continuation is coming. Okay, so bull flag, pop. But the market needs liquidity. So it's either going to stall and hit this candle here, turn around. Maybe it comes and tops this candle here and then turns around, or it breaks through all of this, breaks this, holds this as the real support, and then turns around, right? So then what I would be doing then as a trader is I would be playing this game. Okay, you can start to get in at the 61.8, which is this order block, right? You can start to get in here, or you could wait and see. I mean, I would suggest probably putting some of your money in here during this order block, maybe right 50%, and then saving for some more for down here, and then put the rest of your money in down here for it goes. Now, there's always definitely a possibility that all this could break. It could come all the way down to this order block, but I mean, is that going to happen right now? All the way 51,000? I don't know. I don't think it's that. It seems like a lot to me. So I like Bitcoin coming down to this area, this 61.8, 62,000 area, buying back up, or even slightly going below it to the 76, 88.6 area, and then buying up. It's not a big difference as far as price is concerned. I'd be buying though. Just what I would be looking to do. Ethereum, I haven't really been following Ethereum much. More of a Bitcoin Solana person, and yeah, but same thing. Bull flag, broke. It's coming back down to get liquidity. Where is liquidity at? Right inside here. I put trap candle because if you come down here in the 4 hour, you see how there's the break right there. And if you then go horizontal with that trap candle, there's probably people who are stuck in their trades, in this area, trying to sell. Like, oh, it's going to pop up, and then they're going to start to think it's going to sell back off after it took all this liquidity. All right, they're trapped. They're trapped in their trades, so perhaps it's going to come back down to that trap candle area before it pops back off. Hello, one user, put something in the chats. What up, Fire Punch? Just looking at some crypto. We got some time to kill right now. Really not really taking any trades. I'm just kind of going over more of like technicals and how I look at stuff and eventually I'm just killing time now to see if anyone else wants to jump on. Eventually I will show why I took those trades that I did and why I'm in where I'm at. Solana, same thing. It needs to come down here and hit this bottom, pick up some more orders before it breaks off. Bitcoin, as you saw, had broken through its flag and came off. Ethereum obviously did that. Solana should be hopefully right behind it, breaking through this and then popping back off again. It might come down to this liquidity area. The 130s are all the way down to the hundreds before it pops off again. And then let's see where. Yeah. So an ADT or Cardano is back down to this neutralized area. It's back down to its area. Hopefully finding some more support there. What has Dot done? Dot has done basically the same thing, coming back down to its area of support. And Jupe, I put out this here when Jupe was down here. I put it out, and sure enough, it popped right off of there. H bar, we're looking for H bar to have a recovery here pretty soon. Shib, same thing. Shib is in the buy zone right now. If I was a SHIB person, I would be buying SHIB. There is some liquidity down below it, but that's a good support area. And Doge, uh, Doge, I was thought it was going to come up, but it's just leaking. So there it is. Let's look at the forex stuff real quick. Fire Punch, if you have any particular pair you want to look at, put it in the chat. But I am looking at GJ. So this is the GJ that I put up, I think, yesterday evening off of someone else's markup. So let's go to Discord real quick. Discord. Uh, So here is the Discord. Here is Mr. Nick XO's post where he's looking at GJ, wanting it to sell down. He's got his 1 hour fair value gap and his Fibos pointed in there. And so I said, well, look, this is what I'm looking at. There's my order block, and that's where I drew the Fibo off of. I think it's going to come to the top of that order block and then come down. And so that's what I was saying. Let's check it out. And there it is, ladies and gentlemen. Playing off the order block, all right? Because if we play off the order block, this one should be the swing marker here. And if that swing marker there gets broken, which is basically a double top, I mean, if you look here, if that double top gets broken, there's no telling where it's going to go. So you could play like, hey, look, I understand that there's liquidity and there's a double top there, and I understand this is very risky and it could break. That's why your stop loss isn't very big. I mean, I just put my stop loss just above those two just to play it. And yeah, so I put that out there last night, and then it melted. I mean, to the pip. I mean, it melted. I always said you want to put your entry just a few pips below, right? Just in case it doesn't hit perfect. And it's exactly what it did. It's a few pips right below, and it tunk off. And it started selling, and as of now, that's 50 pips in profit, 47. So, yeah, there's GJ. So if I was selling GJ, you could have sold there. You could also maybe be waiting for the trend line to break on GJ, but it should come down and take out this liquidity. The idea again is always wants to hunt liquidity, right? So it should come down and take this out, and then this is the swing marker. This is the order block. Find that as support. Give us a nice double bottom for a new high. All right, so that is the idea. We're going to break down the ideas a little more in the 30 and the NAS. I just wanted to look at this real quick. And with UJ, so on UJ, I understand like on the bigger time frames, um, I would like it for it to come all the way down here and take out this double bottom, right? And hold this as support. I see that, and that's what I would like to happen. I'd like my mouse to go where I want it to go also. Um, come down here, right? But I don't know if it's going to do that. And with the way it's been so bullish, I kind of going to start maybe play this this internal move here, right? So push off, retrace, push off, retrace, push off. Did not set a higher high, or as of right now has not set a higher high. So I'm okay with playing this internal move back down to this double bottom and then go. All right, because I see that they have this little low here, and hopefully it'll hold this little swing marker here. So I'm willing to risk whatever amount of pips that is, not a whole lot, for this bounce all the way back up and top, and maybe even set a new higher high, because that might be the liquidity that it needs. It's bullish, so we can be a little riskier in the buys to go with the market flow. So um, that's what I think on that. Let's go to Goldilocks, because this is one that I've been looking at and been watching now for days, and I wanted to get this and put this out there for the reason why I'm doing what I'm doing on gold. Okay. Okay, so as we know, bullish, right? Very, very, very bullish. This is what I consider my swing marker, because this low has taken out all of this liquidity here. All right, you had a double bottom here, which is liquidity. You had a low here, but see, look, this is what I want to really stress, and this is kind of what I want people to realize: the way that my thinking works and the way I've got the markets working here is this low did not take out any liquidity on the other side. Therefore, that's not a real low, right? This low did. It took out this liquidity. So that's a pretty good low we could have played off of, but it got broke. So got broke, gave us a double bottom M formation, or excuse me, W formation, right? And that's the low. This low here, the one I have circled, took out that low, all this liquidity, this double bottom. It took out all of that stuff and almost set a double bottom with this guy, right? So there's the bottom of, like, we look at the bottom of this candle, it's right there, and then there's the bottom of that candle. So basically, touch the wick. All right, basically touch the wick right there. That's what I'm trying to say. And that basically is really a double bottom off of this. Okay, so at double bottom, it had a good support, popped off, came back down, touched the candle, relieving all of this pressure. And these are people that were in sales that were stuck, and it came back down. That wick came back down and got them out of their cells and equilibrium, and also, formed in more of a support area. So for me, this is a good, on this time frame, this is a good bottom right there. So this is where I start building my fib off of. If you also look, that's the low that led to this high. So that more confirmation that that's the good swing low. I do not want that to break. If that breaks, then we're switching everything into sells, and then we're looking to come way down here. Okay, so that's my bottom. Okay, so I wanted to reiterate, how do you find the good bottom? Like, that's the way I think about it right there. Now, since we're looking at now this area, this is the area that we're playing in, right? From this fib, this is our area that we're looking in, that we're trading in. Everything inside of this area is internal moves, right? All of this stuff is internal moves. We need to recognize that this is all internal moves, and this is where most of people's lunch money gets taken. So we have to be careful, right? So last week when I took that sell on gold, I fully knew that this was an extra risky trade because I even said it on the live. This is the last sell that I'm taking when I got up in here. Like, I'm not playing this 1, 2, 3 top, 4 top. It's too dangerous. Now I did play it and I did lose that trade, but at the same time, we realized the game that we're playing. I didn't know, but I had a damn strong feeling that this was not the real bottom. All right. It had technically not hit the 78.6, that just missed it. Okay. And if we look at this fib from the top bottom down, it never hit the TP, right? So that trade never hit TP, letting me know that this was not done. It gave us a good double bottom. Now, I wish I would have taken that buy with the rest of the world, and they ran it for a shit ton of pips, which is cool. Good for them. I didn't do it. I knew, I had a strong feeling, I should say, this was going to get taken, and it did. Okay, so now we had the 236. They got hit on this sell, so now we're good. And the 88.6, 78.6, this whole buy zone that we're playing has been hit, and we're good now. Now we're free to start buying back up. Again, this is the area where everyone gets their lunch money taken. All right. These should not be the big moves and the big bangers. These are the ones you protect a little early. Those are the ones you take your profit a little early. That whole deal. This area now that we bought, and I'll admit I've already closed out. I only have a runner running right now. I'll admit that. This area is where you buy and you hold it. Now we have to realize then, where is liquidity sitting? What is this market trying to do? It's trying to hunt. So when it was doing this, it was setting up liquidity on both sides, and it needed to hunt both of them. Okay, so this double bottom gave it enough to push through the top and break, and it came right to this order block area right there, and it turned around. Now, I didn't think it would pop above it. It'd peek its head above it, but it did. Okay, if I was going to be selling, which I didn't because this is in the middle of the nighttime, that was in midnight, right? So I didn't take that sell. And I'm glad I didn't because I would have had my stop loss up here and it might have hit my stop loss, right? So I marked off the order block and then it hit it in the middle of nighttime and then sank. Okay, it is what it is. I missed that sell. But we have gotten back in down here at the bottom. So I want to go over the external structure so we can have a better understanding of why the market is doing what it's doing. It bumped up, good market flow, left the order block down below that I thought it needed to get taken and needed the bottom, which is this red line. I thought that bottom, that order block needed to get taken. And that's why I did not trust these buys for all the way up top. All right. And there we go. We also have this last area and this last sell candle that had been virgin. So again, the way I look at it, I'll talk about virgin candles. This last sell candle right there is the last sell candle that did not get touched. Undo that. Sorry about that. All right, look. This sell candle from top to bottom is virgin. No, it has been untouched, right? So if we look, this sell candle got wicked here and here. This sell candle that I have marked off did not. This came down and touched the top, but it did not get it. It did not come down into this area, and then it took off, right? So all of this stuff still had not negated that last sell candle. So that was a target of mine. I was like, look, man, this thing is not done selling off. All right. So that's the sell candle that I wanted to get hit. And there it is. It got taken out. Okay. Got taken out. Set us a little double bottom if we come down here to like a little bit smaller time frame. Popped and gave us another clean little double bottom and now pushed off. So I'm in buys. And this is the deal. So I was playing my London strategy yesterday. As a matter of fact, we should be buying right now. We should be buying this second, actually. One pause. Sessions, 15-minute chart. There it is, close. We should buy right now. Let me go to my broker. I'm buying gold right now. Buy. All right. I'm in buys. I'm in buys. Let me hide this long so we can show this. All right. My 15-minute gold strategy buy, I just bought. All right. So I'm going to put another one right here, right where I got in right there. All right. So the way I'm playing this strategy out, and I'm not going super crazy on it, but the way I'm playing this strategy out is what I did yesterday. All right, my stop loss is 50%. My stop loss is right there at 2306. Let me adjust this, 2306. All right, I'm risking a 0.5%, 2306. And I'm typically in my strategy, I'm going for 100 points, 100 pips, which is okay because that's also this order block here. Right? This is the bottom of the order block here. So 100 pips is right in this area right at the very bottom of that. So now I'm just gonna make I'm gonna make my TP right there, right? It's a 1-for-1 trade. It is what it is. 2330. So I'm in at 2318. I'm going for 2330, just a hair more than 100 pips. Price 2330. Well, it's telling me that's a negative R to R for some reason. So okay, 2318, 2330. That's 100. That's 10. That's 100 and like okay, it's basically 110 pips. And then my stop loss is 2306, 2318. Is there a big ass spread or something in that? The spread is 16 pips. Oh well, it is what it is. All right, fuck it. It is what it is. Okay, so we're playing the London strategy, right? I was in the middle of rambling on about something, but I recognize that we have the close of the London. So this is the London session here, right there. This 15-minute candle closed right there outside. My stop loss is always 50% of London, which is here, and my TP is 100 pips. So if I'm trying to catch 100 pips, that's what I'm TPing as. I'd also marked up over here that this was like a breaker block trap area right there. So really, my 100 pips is really into the bottom of that, which is cool. I'll close out half of that trade, or I'll break even that trade and see if I can catch the runner. Um, but yeah, so let's go back out to the, since we took that entry, let's just go back out to the higher time frame. We'll continue on rambling what I was rambling about. Okay, so now we have the external structure and we have the internal structure. Okay, so then we now have this order block and it left a lot of liquidity sitting up here, right? It just left the market. All of these buyers, all of these, they had to have dropped a bomb sitting right there, and it's at that order block. So we could say that that is now a liquidity area. Let me delete that. Let's do this. All right, I can do that now. That's the area that we're targeting for liquidity. All right, we could delete this because that's already been taken out. That's already been taken out. Now we have our order block. We have a good double bottom. Technically, we could do one of these because eventually, one of these days, maybe that'll get taken out. We're recognizing, right, we're recognizing that there's all this liquidity sitting down here below. Sorry about that. Sinuses first thing in the morning. So okay, so again, this should be our target. Now I realize that this is so bullish, excuse me, bearish. This is so bearish that it might get stuck right here. And maybe not get stuck right here and come all the way back down to give us a double bottom, or come back down and give this a double bottom. I'm not sure. So I'm taking TP1 at 50% of this area, which is 50% of this candle. Also, that's where my trap candle is right there, right? So my TP1, not only for this short little trade that I took is right there, but if I'd had the bigger trade, it would have been right there as well. TP1 right at the 2340 mark. Um, and I'm gonna let these run. So that's why I got in down here. Okay. I saw the last candle. I saw the Fibonacci. I saw the 23.6 extension on the first move. And so, yeah. Now, now let's look at overall. So we're talking about the first move, right? The first leg. And maybe this is not done selling off. Okay. First leg, retrace. Second leg, retrace up in this area somewhere, maybe up into this order block. And then what? And we're going to come down here and hit these two areas. All right. So let's just look. 61.8. There's an order block there. There's the bottom right here. Now look at that. So again, no coincidence. I don't think this stuff is coincidence. I think the harmonics work out this way. Look at the bottom of this guy. Right there where the 61.8 is. So perhaps that is a good area. If it does break this low and break all this for liquidity, breaks all that, then that would be where I'm looking to start to turn around and take longs again. So I'm just going to delete this little thing here. Let's go back to the OBS to see if there's any things. No, it's only two of us in here, OBS Studios. Okay, so that's that, right? So we're targeting liquidity and we're seeing where the market wants to go. So let's go back down to the 1 hour to figure out. Okay, let's get rid of sessions. We don't need that anymore. Okay, there goes our trade. We're in profit. So came down. Now this is why I call this a trap candle, because that right there, that's buyers. The market's not going to print a 1 hour buy candle unless there are buyers sitting there. And so it kind of makes sense, right? If you think about where the market's going, here, retrace, buy, right? There's buyers in there, but it didn't do that. Those people are trapped in those buys and they're in drawdown. So they're going to want to push this market back up to get them out of their shitty trades. Understandable. So that would be my TP1, which is also right where the 100 points is for this. And then if we look again, internal structure here to there, right? 61.8. So it makes perfect sense to take a TP right there. 61.8. right? This is now forming the second leg. I don't know if it's going to come down and then hit it, but let's just hopefully hits it right now today in the next hour. 15-minute candle. So again, this is the little strategy that I worked out. And this is why, okay, I was told you I was going to tell you why I closed out my majority of my position down here. Because yesterday when I took this 15-minute buy, I was up and then it came all the way back down and did not hit my stop loss. I mean, it was within like a pip. And then it pushed up. So I was in drawdown from here to there, right? But then I was in profit from here to there. So if I closed out this drawdown and I closed out the majority of this long that I had, I would be in profit slightly, only by a few dollars. It wasn't much. But for me, okay, I'll just take that as a break even. I won't take an L, and then I leave a runner, right? And so my runner in gold is still open from down here. So I'm still in profit banking on that. And then now as you know, I just entered another trade on that 15-minute close to see we can get that to work out. So last week, again, this is like a strategy that I'm kind of working on. It's not the best strategy in the world, but it has been working so far. So if we come back to the discords, and I posted on here last week, win, break even, win, loss, flip that right back into a win. So we had 1, 2, 3 wins. We only had one loss and one break even. It was up 300 points again. We're only taking the wins for 300. We're not counting runners. So win 300. This one L gave us 70. I put 270 because I was fucking seeing if anyone's paying attention. It's really 230. Obviously, 300 subtract 70, 230, with one break even. So 3-1 risk, 3-1 win loss, up 270 points off of 3 trades, or 4, 5 trades, whatever, but 3 Ws. So that's the strategy, and it worked out last week. And so instead of talking about it, I just show it, and hopefully this is it too. This is something else that I want to talk to you. There's 3 people on here, and see if you guys can figure out how to back test this and come up with some sort of strategy around this. But look at this. At the beginning of London, which is 2 a.m. my time, 1 a.m. Well, it's 1 a.m. my time, right? This is what I have for London, 1 a.m. my time. Look at how at 1 a.m. it sets the bottom and it never comes back. Okay, and I'm going to show you this. And I haven't done the back testing. I'm not awake at 1 a.m., so perhaps it's not the best time for me to try to trade anyways. But if you look at the beginning of these sessions, look, comes down. Okay, so this time frame is actually 1:30 here. So 30 minutes after the candle opens, right? The close of the 1:30 candle, that's the bottom at a double bottom, and then it never comes back. Look, 1 o'clock candle sets the bottom of this double bottom, sets the London, never comes back. And so I was just looking at this, right? Look at this. It starts to sell off just before 1 a.m. comes up, even the 1:30, 2 o'clock candles right here, and then tanks off, never comes back. This is it right here. Never, it tanks off a little bit, gives us a double top right in this little area, never comes back. That's the very bottom here. That's what the 115 candle. 115 candle is the very bottom, 15 minutes after that one, and then boop, look, never touches, never comes back. Okay, you have 2 candles, the 115, 130 candle close, basically giving us a double bottom here. Adios, never comes back, gone. This one does though. So this one, it was coming up, and you say, okay, well, maybe this is the bottom, and you'd have taken a buy, but then it came back down. So this one's not quite as clean as the other ones. This one is. Look right there, 1 o'clock. See you later. That's the bottom, never comes back. Here it is, 1 o'clock candle, never even comes back to the entry of that candle. It does come back to the entry of this candle after the entire London session. That's a lot of pips though. It's definitely enough pips to protect. 100 pips, right? This one kind of messes around. Okay, I see that, but it does set the bottom at 230. So basically, it looks like London. This one not that great, but you see the point that I'm trying to make. This is the bottom of the candle. It does double tap it, but then it takes off for another huge bunch of tips. So I haven't back tested. I haven't kind of strategy around it, but I am noticing at the top of this London session, it kind of sets the higher low for the rest of the day. And it did here. There's the beginning of London, 1:30 in the morning. That is the low for the day, and it took off. Here it is right here, 1 o'clock in the morning. closer to the 1 o'clock in the morning. That's the low for the day, and it took off. So perhaps there is some sort of something we need to look at there and go around that. I know that the Goldfather used to do what's called yeah, I'm going over NAS130 now. Let's just do it now. There is something about the midnight candle. So let's look at 30 on the bigger time frame, right? So we see there's a good area of liquidity sitting up top. Again, we want to be in buys because overall the market has been bullish, right? So at the end of the day, all of this shit inside here is internal structure. All this inside here is what a lot of you people could say, oh, that's your no trade zone. You don't want to fuck around in here because this is where your lunch money is going to get taken. So if it was me and I was like a long-term trader and I worked every day, I would just wait for the market to come back down to this area, take out this liquidity, and then look for buys. All right, but that's not what we're doing. But we do want to realize that we're in a bullish structure, and we have set a top and bottom. Excuse me. We have set a bottom, and we have set a higher high top. Even though this higher high top is basically double top. I mean, it's almost the same amount. So this is telling me there's a lot of liquidity sitting here, which is a target. This is going to get taken, right? I just don't know how deep this is going to go before it takes this out. So now that we've had a low, high, and if we draw that Fibonacci, it has not hit the 78.6 or the 88.6 yet. So therefore, I do not think these sells are done, right? I'm still willing to take this sell here to run down to this area. So perhaps what we need to do then is to look at this right there. We'll mark off our buy zone. All right. Now let's look at the Fibonacci's then to get us there. Let's delete this fib and we'll leave that one there. But let's look at this first move. Right. There's the move. And look, it just so happens that the 88.6 matches up with the 23.6 of the TP extension. What happens to match up with, if you look at this last candle, that last sell candle, that's 50% of that last sell candle, which is also the very bottom of the body, not the wick. So there's like 4 different reasons right there. It all started to line up right there at that point. So that's where I want to see this market go. Okay. So let's come down to the 2 hour then. So now we have to realize, guys, that we're in internal structure. This is not where you want to take the super risky trades. This is not where you want to try to hold super crazy long runners. I mean, no, you want to hold your runners, excuse me, but this is not where you want to start putting huge bags in and think you're going to hit 1,000 pips. I mean, it's possible, right? But you have to realize that we're in internal structure. And we're going to drop bags. We're going to drop them down here at the 88.6 where we just marked up, right? So this is risky shit. This is internal shit. We have to realize that. So this is what I see. I see the sell off, order block, sell off. Therefore, if this is going to continue to sell, it needs to get back into this order block to pick up more liquidity, to pick up more steam, right? So then what does it do? It does your little Elliott wave retracement back into the order block and then sells off. This is exactly what I said last week on Andy's Zoom call. I called out that right there. I said 29058, which is where my red line is which is where I called out and where I entered my trade. Why did I do that? Well, if we look at the Fibo from the top to the bottom, it's the 88.6 right there. And also on the big time frame, it's the 50, 61.8. There's the 50 on the big time frame. There's the 88.6 on that localized internal Fibonacci. And there's the order block. From the top to the bottom of this little consolidation area is the order block. It broke out right there. And so that's the area. That's the candle, the last bit of buy candles that I've seen that needed to get touched. So again, if we now really zoom in on this, there's a buy candle right there. Right? And that buy candle, I mean, it had this wick into it, but it took off. It never really came back up and gave us a double and then took off, right? So these people are stuck in their buys. And so if we really mark that off and we go to the bottom of that candle, that's exactly where this wick came into play. Right there. That's where that wick came to play. It took out that buy candle, okay? So it's giving us reasons, and that's why I took that trade. My stop loss is right up here. As you can see, 10% of that Fibonacci. And so, in my opinion, That was the target area. It just made sense. And it makes sense to me that this needs to continue to sell until we get down here. So I'm willing to take the trade. Let's take off the sessions because we don't need them. And where was that trend line that we saw? All right. If you're a trend line drawer, trend line trader, you could also say, okay, well, there's the trend line. Let's make it black. In this situation, they're normally black on my charts. There's the trend line. So you could have entered in this area down in here. But again, I'm not a trend line trader, so I don't enter there, but it does give me confidence to know that, hey, now the trend line has been broken. I also see that this is a double bottom. So now I have more confidence here knowing that this liquidity needs to get taken out. So if I do enter this trade, my TP1 should be when this clears out, right? So there's at least my TP1 right there. So I'm holding 100% of my bag until it gets there. I'm not closing early until it hits that at least TP1. All right, and I haven't. I still have the full position open. Perhaps when it hits this, I will take half off. I guess we'll have to see, or I just let that son of a bitch run. If that's the case, that's 400 pips. I booked 400 pips at half profit. I'm already protected, and see if I can't really let this come all the way down. And I think that's what I'm going to do. I don't think I'm going to close half. I really want it to come down to here for my TP1. Actually, I want it to come down to there. All right. There's the top of the order block. Right. Here's all this liquidity. Right. We see that there's these double bottoms. Look at this long wick, this wick, this wick. All this shit is virgin. This hasn't been touched. All right. So this is the order block. So I want to play order block to order block. I want to play it all the way down to here. So my TP1 then is going to be at 38,200, 38,199. You get the idea in this area, right? I want all this liquidity to get taken. Now, once we get down into this area, we're getting pretty close to where we're going to start buying up. So is it going to be just one move straight down? I hope so. We have news tomorrow. Um, that's why I protected. Maybe it would, I don't know if I'm going to take any profits early, but hopefully that'll be my TP1 and we'll see. I don't really like the fact that I'm thinking 30 is going to sell off and I think gold's going to buy up. Usually in this year, they've been moving in the same direction. So we'll see how that goes. But this is my thinking on gold. So if nothing else, you understand. Um, yeah. So I think CPI will bring some news. Here's the deal. So let's mix in some fundamentals with some technicals, right? So fundamentally wise, everyone is expecting the Feds to cut rates. It's been turn on Bloomberg. It's the only thing they're going to talk about, and that's the reason why last week NAS really pumped up. That and Nvidia and AMD are doing really well in the AI space, so Nasdaq has been pumping. That's that's all about. They're not cutting rates tomorrow. Highly, 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 highly doubt it. Matter of fact, I'd bet my house on the fact that they're not cutting rates tomorrow. But what they're not going to do tomorrow is 100% sure they're not going to raise rates tomorrow. So if the rates, excuse me, we're not talking about fucking Fed interest rate. We're talking about CPI. Excuse me. I gotta shift my brain because my brain was thinking rates for some odd reason. I don't know why, but the same deal. That's the reason why Nasdaq was pumping last week. Well, CPI was the inflation. Then I don't know, man. To be honest with you, I don't know what inflation is going to be like. I don't think it's going to be as high as they think it is, or I think it's going to be what they think it is. I think by now we've figured out what inflation is. It's probably going to come out nil. To be honest with you, it's not going to be some shocking number that it was after COVID, where inflation was going fucking bonkers. I think it is starting to kind of teeter off a bit. It's obviously still high, but is there going to be an oh shit moment tomorrow? No. So which means that the market has probably already figured that in. The market is comfortable with inflation the way it is. Obviously, Nasdaq is setting all-time highs up here in 30. We're close to all-time high, and same thing with gold, right? So I don't know how much impact it'll have tomorrow. What you should do then as a trader is look up CPI and go look up all the previous CPIs. All right. So the way I do this is continuing John claims Thursday CPI May. Right. So what I do here is I click on this and you go back and you look at the charts. This is not what I wanted to see. Go back to here, and maybe it's this right here. It's still not giving me what I was expecting. Okay. The point I was trying to make is, here we go. May 15th, April 10th, March 12th. You look up these dates, right? We'll just take May 15th for an example. So now we come back to the charts and we go look at May 15th. April, May 9th, 10th, 11th, 12th, 15th. So let's put a vertical line on May 15th. 15th, 2 a.m. So it's in this area, right? And we're on the 2-hour chart. So let's just go to the 1-hour chart and look for this line. And it probably drops, news drops at what, 9 probably? 7:30. Okay, 7:30. All right, so look. So you come back and you go there and you go May 15th, let's just say 8 o'clock. Okay. So what did CPI do last May? The inflation of last May is probably pretty fucking close to what it is this May. So there's the 8 o'clock candle. There's a 7 o'clock candle. So news dropped inside of that candle. And for that one candle, top to bottom, we had 250 points. All right. So we can come back down, let's say a little bit smaller of a time frame on that and say, there's your candle, right? There's your CPI data. All right. Now, is it 250 points? Now, is that enough to knock you out of some crazy position? Well, if we come back and look at it in our chart here, what is 250 points? Well, that's a double top probably, right? That could double top us here. We've already protected, so that could knock us out of our trade 100%. And it kind of makes sense for them to do that, right? Are they going to let us take this easy entry? Are they going to come back and retest that entry before it sells off? So, or it takes that double top, climbs up a little bit higher to make sure that we're off, and then Thursday, Friday, sell off. Yeah, that could be possible. Or it just gives us our 250 points, it sells off all the way back down to here, and then Thursday, Friday, it consolidates, and then turns around for the week and finishes the week off where it should. So, right, those are the three things that are going to happen. Either go up or down. So, how many pips are we at now in profit? We're at 300 pips in profit, right? So, I guess it kind of depends on what today is going to bring us. I don't expect to see a whole lot today, but there obviously, like I just showed, it very well could double top us for that entry and then sell off tomorrow. I'm already protected, so it is what it is. Um, I hope, again, trend line broke. I hope this comes all the way down. So for me, my hoping, like what I want to happen, I want CPI to print and come all the way down and give us this order block tomorrow. And then I'll take my profit and I'll look for buys. Because then if we look at the weekly candle, I'm going to hide all this shit. All right. The weekly candle is nowhere right now. So this could come back down and then finish the week off right back in this area for a double doji looking kind of candle, right? Kind of one of these. And you'll notice on the weekly candles, there's a lot. I mean, there's a lot of bull candles, obviously, but there's a lot of little doji candles in here where the week finishes off close to where it opens. I mean, this candle, that candle, right? This candle. So as you see, we've had a doji and a turnaround. We've had this doji, so either two things that you're going to keep selling, doji are going to come up. So, I can't predict that far ahead. I don't know. But all I can say is we're at where we're at. And that kind of makes sense to me what it's doing. Because again, the one thing I was always talking about is it needs to hunt liquidity. So there's the order block. Where is liquidity? Liquidity is down here. If it's going to set an all-time high, it's going to keep pumping off. It needs to come down here and hit this area. Right? So let's look at NASDAQ because you asked for NASDAQ. I don't really know what the fuck NASDAQ's doing. It's setting all-time high, right? But at the same time, it set the all-time high. It's giving us a clear resistance, right? A clear dispersing. So again, what does the market do? And I forget the terminology perfectly, but it distributes, it consolidates, and then disbursement, right? Consolidates, This would be disbursement right here. Sorry, disbursement there, consolidate, and then I forget what it's called when they buy it back up, right? Disbursement is where they disperse and they sell off, then consolidation, and then the buy up. You get what I'm saying? The what the market does. So what is the market doing? That's what it's doing. It popped off, going sideways, collecting orders. Now it needs liquidity. Where's liquidity at? Well, we know that the liquidity is sitting right here, right? We had these bottoms right here. We had this long wick. And again, I don't think this is a good bottom. I don't think this is a strong bottom because it took out a little bit of liquidity, but it didn't really. Look at all this area down here. That candle didn't do shit. I think it needs to find a top and then sell off, right? Me personally. Where is liquidity then? I mean, you've got an order block sitting here. Well, it's just such a strong market. But if we come back out and we look at a higher time frame, right? Where's the strong bottom? Well, we obviously have one down here, right? We obviously have one down here. And we had this gigantic wick that needs to be filled in. I mean, that doesn't look healthy to me, right? So where then is the liquidity, or where is then the strong bottom? That wick did take out all the liquidity. I get that, and I kind of see one of these as liquidity, and then we look at order blocks. I mean, we have this sitting here, right? And then we have a very unhealthy market, no sort of retracement. So if it were me, and I'm really looking at this, I want to see the market come back down to here. And doesn't that make sense? Look at these two bottoms. Look at these two bottoms. Look at that liquidity. Look at this, how this is a good strong bottom off of a good sell-off. That was a good strong bottom. And then that bottom here took out all of this stuff. This bottom took out all of this, all of these lows, right? And it held this previous order block as the swing. It makes sense. Pop off, good retracement, take out all these people who are buying, pop off. What do we need? We need a good retracement to come down and take out this wick, take out that consolidation zone, and hopefully come down here and retest all of this, and then it pops back off. I just don't know. Obviously, no one knows when that's going to happen or how deep or how fast or none of that stuff. So, but we have an idea. We can come down into our 1 hour now, knowing that it needs to come down here. But again, this is kind of risky business because you don't know if it's going to pop off and take off all this top. So what you need to do then is you need to wait for a good break of structure. You need to make sure that the sellers are here. The sellers are not here yet, or they might be, but this is just consolidation. This is just gathering orders for a buy or for a sell. This is just consolidation. This is your no trade zone. Do not trade in this area. You're going to get fucking smashed. If you do trade, take small trades, take quick trades, get in and out, and do your little scalpiness back and forth, right? This is and you'll see it written on here. No trade zone, right? What you want to do is you want to see if this market breaks down below, all right? Let it break down below. And then at the same time as it does this, it's going to set up some sort of liquidity in here. So let it break below, let it come back up. And now you could play your Fibonacci's off of this area and your entries here, your stop loss is right above that, right? And now you take a sell and now your TP1 is there. And you let it run for all the way down. You see what I'm saying? And then you let it run and you hopefully this comes all the way down to there and takes out this liquidity. But you need to wait for structure to break. I mean, if you want to be confident in that trade, know that the sellers are here. All right? Know that the sellers are here. Now, also, you've heard me say it too before. I see that there's a trend line right here. I don't take those trend lines because this isn't a very healthy pullback. I want to see a pullback and then come back up. The trend line that I would then use if you're going to be a trend line trader is this trend line. Wait for a healthy pullback. Wait for the market to pop up, come down, give you a good area, and then come back up. And then now you can enter your Fibonacci trade here. And if you want, re-enter another short when it breaks trend line. Right? So let's look at that in this situation. See? There's a solid pullback. Set your trend line on up solid. Now this touching this trend line, touching this trend line. Now you know the trend line needs to get broken. So there's where your trend line needs to be, bottom to top, or that bottom along this good retest. Pop up, good retracement. There's your trend line. That is a good trend line you should use. The ones that follow super tight, in my personal opinion, are not good. Those are not the ones you want to use, right? So for me, I'm not running a trend line like this, right? For the buy, I'd have to wait for this one, right? I have to wait for this good on the buy side retracement, and then now it would have given me a buy right here on that break, right there, right? Not running super skinny. Wait for the retracement. My personal opinion on trend lines. If you need more of that, go see your boy Andy because he knows more about that than I do. But anyways, so that's what I see on NAS. That's what I see on 30. That's why I've taken these trades. That's why I think I've pretty much broken down the logic on all of those. So we are looking. Oh well, we're in drawdown on gold, but again, we're only risking 0.5%. And this little crazy gold strategy, it is what it is. I'm not saying this is the best strategy in the world, but hey, our stop loss is here. We got a stop loss for a reason. We're only risking 0.5%. And, this is kind of like the top of this support resistance area, right? Right in this area right there. So it's just coming back and retesting that breakdown. So again, now then we could talk about this. So let's delete that little box that I just drew. And just for the shit of it, we'll delete this box. If you look at this, this is kind of the breakout area, right? We had this consolidation through here. I don't like purple. I mean, I don't like yellow. I want to use it as a purple. We had that area. It broke out right where that white line is, which is a fib on a higher time frame. But we also had this top. And so when it broke out, that's what you could call a breakout candle there, right? That's the little intermediate section where people are also trapped because once you get to this area, people are then selling. Oh, look, this is a wick up. It's back here to the top. We're going to sell. And then they got screwed because the market popped off. Market came back down for the equalization, let these people out of their trades, or the big bankers and whatnot, or to and also to put more money, because again, for every buyer there has to be a seller. So if they're selling here, the market's going to come back down and take that for liquidity and not pop back off. Let them get out of their their stop losses and their break evens, whatnot. Make some liquidity in the market and then pop back off. So as you can see, it did that now. So it's all good, no stress. It is what it is. Didn't over leverage. So, anyways, thanks Fire Punch and thanks Zara. Who else is in here? I see there's only 4 people in the chats this morning. Who else is in here with us? Put something in the chat so I know who is in here. So we caught that gold entry, and we're in 30 already for sales from the other day. Again, this call this morning wasn't a call out live trade because I'm already in sell. NASDAQ isn't ready to sell yet. I'm already going to sell on 30, and we did take that little London trade buy. So that's the only one that I took. And that's it. This was basically a call this morning to go over higher time frame market structure and to really identify where liquidity zones are and the reason why the market is moving the way it moves, right? This stuff looks really good to me. I mean, it made sense, right? Come back up and retest this order block, test that last candle, come up here. All that stuff makes sense. And so now this retracement is making sense to this area, my purple box, right? That retracement makes sense. So Elliott wave 1, 2, 3 up into here. This is a very bullish. This is probably going to turn around and sell off from here to come back down to give us a double bottom for the real buy. And even what I call FU candle. So again, this is the reason why I didn't take the buys off of here last week. It's because I was waiting for the FU candle. This double bottom's too easy. I know a lot of people who took that buys. Congratulations. They ran it for a lot of pips. I wish I'd have taken it with them, but I didn't because I was being stubborn. And this was the fuck you candle for all these people who are buying too early. The FU, I'm down. Now let's see if we can come down and get us a good double bottom. So again, What do we like to see for bottoms? You know, usually a good W formation and then go. So that's about all I got for today, guys. Hopefully this little gold 15-minute plays out for us today. We'll see how it goes. I don't like drawdown. I'd rather it just go straight to profit, but you know, it is what it is. We didn't over leverage. And yeah. You guys have any questions about anything we covered today or any other chart, please put it in here because I'm about to get off. It is 8:30 in the morning. About to call it a day unless you guys got something real quick you want to know. And there's our stop loss. All right. Anything real quick, guys? That's for Yep. All right. If you guys have anything, hit me up in the chats. Let's watch this gold fucking retrace and pump up. Come on, baby. Again, you know, we have to leave this runner before I take off. Let's just say this real quick. If you're in a gold buy anywhere on here, you got to give yourself a chance for this runner to run because gold's bullish. Do the fucking wars and the BRICS and the Chinese, everyone else buying up all the gold in the world. This shit is bullish, man. If you catch an entry, take your profit. Do not close your runners. I mean, gold is bullish, right? No reason. Jesus, what date was this? 2011. So much volatility. Look, slow. 2011, 2020. Just the volatility is just starting to kick in. I mean, look at that move since. I mean, come on. This year, February 24 has seen the most volatility. I mean, look at how much that is in 1 year since, you know, not even 1 year, just a few months compared to I mean, like years worth of just nothing, right? Just crazy. Let this fucker run. If you catch an entry, let it run. All right, I'm out of here. You guys take it easy. Mr. Hernandez, thanks for stopping by. Obviously,